Hello, traders, and welcome in a new daily live market analysis session brought to you by the market research team at OnePro. This is Mohamed Yaoud, and I'm the head of global market research. And today we're going to have a quick look on the markets. Basically, the behavior and the price action in the markets is still going in a sideways range. We are having this volatility within the same range. So we are not having any big movements on the major currency pairs or commodities. However, we are still trading pretty much the same levels pretty much on gold, on the US Dow Jones, the US dollar, and so on. So we will try to sort out and figure out some trading opportunities for today. We are having some very important data to be looking for today on the economic agenda. So what those indicators are and how could they affect the markets? What are the expectations? And what does the technical analysis tell us? Those are all questions we will be covering in this live session. So please stay tuned. Starting off quickly with the economic agenda for today, it's Thursday, the 26th of January. We can see here that the Chinese economy or the Chinese session is still off for holiday to celebrate the new Chinese or the new lunar year. So basically, as usual, we are having this little or s- slow volatility, weak liquidity during the Asian session. This is pretty much why we're having this sideways range in the markets. Today, we'll be looking for some key data and pretty much from the US economy. Most of the economic agenda today will affect the US dollar. And on top of that, we will be having the GDP numbers, the first or the advanced reading for the GDP for the last quarter of the year 2022. So have a look on the main thing that we will be looking for here, which is the advanced GDP on a quarterly basis. The previous reading was basically 3.2%, which is for the third quarter of the year 2022. Expectations are that this GDP will go down a little bit to 2.6%. And this is basically widely expected by the markets because, believe it or not, this is one of the disadvantages of the tightening policy the Federal Reserve is currently following, which is to slow down the GDP and, of course, to affect the labor market negatively, just to calm down the economy and prevent the economy from running too hot after the easing or the monetary easing cycle we have had after the COVID policy. So, as a result of the current tightening, as a result of the interest rate hikes, 7 meetings during the last year, the Federal Reserve raised interest rates with 4 times of 75 basis points. So, of course, this would all affect the economy in a bad way or hurt the economy in a bad way. So the Federal Reserve today, of course, expects to see the GDP for the fourth quarter of the year 2022 to have slowed down a little bit. However, it all depends on the amount of this decrease because from 3.2% to 2.6%, this is what markets are expecting. However, if this reading came out lower than the expectations, which means that any lower number than 2.6%, only then we will be having a little bit of a problem because the Federal Reserve, although he's trying to control or to combat inflation, and this will have a negative impact on the GDP. However, the Federal Reserve doesn't want to push the economy into a deep recession by following this tightening policy. So he's trying to catch the middle ground between not tolerating the inflation and still not pushing the economy into a deep recession. So if today we have this GDP around expectations, a little bit higher or just around expectations, I don't really believe this will be having any big or a major impact on the US dollar. However, on the other side, if we have a lower GDP, which comes lower than the expectations, only then markets would start to price that the Federal Reserve will end the monetary tightening sooner than expected because we are trying not to push the economy into a recession. So that's a wrap up for today's advanced GDP expectations. Don't forget that this is just um, the first reading for the GDP, so it sometimes gets revised in the final reading that we will be having also shortly after a couple of weeks. Today also we will be having the durable goods and the core durable goods orders, which some sort of tries to predict what would happen with inflation, just somehow like the retail sales and what's going on with the retail sales. So of course this is also expected to decrease and decline a little bit. The previous month showed 0.1%. It's expected to slow down by 0.2%. So this is something that we need to watch. And by the end of the day, we will be having the unemployment claims, which is the weekly figure. It doesn't affect markets that much as long as it's within the range or the average. So I mean, 10,000 more new claims or 10,000 less claims is basically something markets wouldn't be reacting to. The only thing is if we have a very high number, much higher than the expectations, or a very low number, much lower than the expectations, only then we might expect this to have um, volatility in the markets. So the previous reading for the previous week was around 190,000 new claims filed during this week, and during the past week, expectations show around 203, so a slight increase. And I do really believe if this number came just around expectations, yeah, we wouldn't see that big of an impact on the markets. However, just as an instance, um, if this, let's say, came around 240 or 250, that's the big increase that I'm talking about. And only then we will be having much added volatility on the US dollar trading during the day. Um, we will be having the new home sales. I don't believe this is something that should affect the market, and the natural gas storage. So this is not the top, things that we will be looking for. The top things we'll be looking for is basically the GDP and the unemployment claims. Only after this comes the durable goods and the core durable goods orders. And that's all for today's economic agenda. Let's have a quick look on the markets, technical analysis side. What does the charts tell us? If you have any questions, please leave it in the comment section below on YouTube, and I'll make sure by the end of the session, I'll give answers to all of your questions. So let's jump onto the charts right now. Starting off with the dollar index, we are still yet again back to the levels of support, what we have been talking about quite recently during this week. Look how many times this support basically supported prices. They succeeded in stopping any decline on the US dollar index. However, I've explained this pretty much more than once. However, let's go through this one more time. Every time the prices go back to the support, we are having a lower high. Again, back to the support, another lower high. Today we are back again to the support. So even if we had any initial reaction from the levels of support, personally, I do believe that because the buying power from the support is going lower and lower, we're having those lower highs. So eventually we will be breaking those support levels to the downside, and we will be having our target set around 101.30 and then 101.10, which is the major, very big support level on the daily time frame. So the dollar index, if you're going to trade the dollar index during the day, it might be suitable to go long for a very quick trade. However, it should be risky. The more conservative approach is basically to wait for a break and a close below the support. So I'll be looking personally to trade something like this. As soon as we break below support, we will be waiting for a BCR, which is a break for prices to break below, a close, full candle close to open and close below those support levels. After then, I'll be looking for a retest, a successful retest to the support, which might serve as resistance whenever broken. Only after this, I'll be going to the downside. So This is what I'm waiting for on the dollar index, a break, close, and a retest, or as we call it, a BCR. After this BCR, yeah, we will be having our targets set to the downside on the dollar index. On the other way around, the euro, it's going higher. However, it's going higher with very, very weak momentum. So during the day, we are currently trading just around a key resistance level on the 4-hour time frame, which is the 1.0915 roughly. Prices are trying to move higher, and during the day, a break, close, and a retest above this level is our long position entry. I know that on the daily time frame, the momentum is weakening so much. However, during the day, during I mean intraday trading, you can have a 40 or a 50 pips move to the upside. So this is, let me just clear this off. This is the resistance we're currently trading just around those levels. A break, close, and a retest above those levels, which is 1.0926, should be our long position entry to target the 1.0980. We might be having a 60 pips move to the upside. However, the euro movement is tied to the US dollar index. So the dollar is trading near support, euro is trading near resistance. If euro breaks above the resistance, dollar will break below the support, and we will be having the movements as expected. However, always wait for confirmation. Always wait for this BCR break, close, and a retest above or below any major resistance. What's a little bit more appealing when it comes to the technical analysis is the pound versus the dollar, because we are still a little bit below the major resistance. We're having like a 30 pips move. So from here, from current levels on the pound versus the dollar, uh, we might start a movement to the downside, just a slight correction. Whenever this correction ends, we will be targeting the levels of 1.2435. So we are only looking for long position entries on the pound versus the dollar. You'll be having around 40 pips move, let's say, or 45 pips move to the upside during the day. This is highly expected. For the dollar versus the Japanese yen, we are still trading pretty much around those um, support and resistance levels. We're having this sideways range. Yeah, it seems that the dollar versus the Japanese yen is heading higher from the levels of 129.04. However, using our Fibonacci retracement, we can see that the levels of 50% might be good opportunities to go short from here. Look how many times this levels basically acted as great support. So when we broke below, prices are heading higher to retest those levels again as resistance. If bearish price action evolves around those levels of 129.85, only then we can expect a move lower. For the pound versus the Japanese yen, one of the good opportunities during the day, basically it has been trading in a bearish price channel. Remember what we said about the pound versus the Japanese yen on the 4-hour time frame? It's a sideways range. So we rejected the resistance levels around 161.70 roughly. We moved lower. We basically had a series of lower lows and lower highs. However, seems that prices are willing again to test those levels of resistance. So on the 4-hour time frame, we are heading a little bit higher. On the 1-hour time frame, this bearish price channel has been breached to the upside. It all started here. So it was lower lows and lower highs. This low failed in reaching the lower limit of the price channel, and it was an early indication that this price channel will be breached to the upside. We had this breach and a break, close and a retest, successful retest, and off we go to the upside. During the day, I do believe, highly believe, that the pound versus the Japanese yen will be having the targets around 161.75. This is our target on the pound versus the Japanese yen. So a solid around 75 pips move is expected. And this is something, one of the few trading opportunities that we can play out with today. On the other hand, the pounds, the gold trading. What happened in gold trading was basically a break above this symmetrical triangle to the upside. And finally, gold was able to consolidate and break above the key resistance that we have been talking about for quite some time now, which is around the 1940. A great move to the upside with good impulse, good momentum. A retest is due right here. And I do believe we will be stopping around the levels of 40 or 50% Fibonacci, which is around 1935 to 1940. So we will be looking for this area of possible reversal. Look already this daily or this 1 hour candle. As soon as it touched those levels, we are some sort of having this upward price action. It will be more clear and visible on the 30 minutes or even the 5 minutes. Yeah, this is what I'm looking for. This is the reversal or rebounding from the resistance and the support level on the 1 hour time frame. So we will just be waiting for another touch to the levels of 1940 and possibly think of going long on the gold trading. So we are having this upward move, break, close, retest. We are just waiting for our successful retest and we will be going long on gold trading during the day. US crude oil is basically trading in a very, very volatile manner here. We explained before that we have this resistance. We expected a move lower. The move lower went great. And since then, nothing has been pretty much taking place. This is one of the types of corrections that it's pretty bad to trade in because it's not an ABC pattern. It's not an ABCDE pattern or a five-wave correction. It's just as volatile as you can ever imagine. So this is what we are having. As long as it's trading inside this sideways or the correction pattern, please stay away from oil. However, expectations are as long as we are trading below this level, okay, that we mentioned as resistance before, which is around $81 per barrel. As long as we're trading below, so I do believe we might head higher, find some resistance from here and target back the levels of 79.63. A break below should push downwards to the 78.09. So during the day, clearly watch the levels of $81. This is our reversal or expected reversal point for the US crude oil. US Dow Jones as well as other indices are basically moving in a sideways range, and yet again one of the worst sideways range that you can trade in, which is the broadening pattern or formation. Prices are basically able to form lower highs, higher lows, and lower lows. So it's basically moving in a volatile expanding formation. However, it seems to me that the Dow Jones here today will find some resistance just around the levels of 33,850. This is something that you might watch for an early entry on the 30 minutes time frame. Yeah, the momentum is already weakening here from those levels. So as soon as you just find good convincing bearish price action from the levels of 33,850, you can short the Dow Jones back to the levels of the mid level of the broadening formation, just let's say around here roughly, or a little bit lower, just around, let's say 33,000 500, let's say 33 600. Yeah, this should be our first target. Whenever you reach this target from here, let's say if you short, that would be our first. The stop loss should be a little bit above this formation, so it's a solid 2 to 1 risk to reward ratio. Whenever we reach the first target, move your stops into break even, and you can move your target to get even more, around 4 or 5 to 1 risk to reward ratio. So this is something that might be a good trading opportunity. However, as usual, always wait for the bearish price action just before jumping into a short trade. So that was all for today's live market analysis session. Thanks everyone for watching. If you have any questions, drop them in the comment section below. And we will meet up again tomorrow on Friday to have our last analysis session for this week. Thank you for watching, and please stay safe.